The fog was heavy over London on the morning of June 20th, 1815. In the dim light of the city, specifically within the trading floor of the Royal Exchange, a man stood by a pillar. His name was Nathan Mayer Rothschild. He was known for his rounded shoulders and his heavy German accent, but mostly he was known for his eyes which missed nothing. The atmosphere in the room was electric with fear. The British Empire was fighting for its life against Napoleon Bonaparte at a place called Waterloo. If Napoleon won, the British consols, which were the government bonds of the day, would plunge to zero. The empire would be bankrupt. If Britain won, the value of that debt would skyrocket. According to the legend, Nathan Rothschild received a message via carrier pigeon or a fast boat long before the official news reached the king. He knew the outcome. He stood by his pillar and he began to sell. Everyone watched him. If Rothschild was selling, it meant Napoleon had won. Panic swept the floor. Prices crashed. Men screamed as their fortunes evaporated, selling their bonds for pennies on the pound just to salvage something. Then at the very bottom, when the market was decimated, Nathan Rothschild gave a subtle signal to his agents. They stepped in and bought everything. They bought the entire debt of the British Empire for a fraction of its worth. When the official news of Wellington's victory arrived hours later, the prices soared. In a single day, the Rothschild family had not just made a fortune. They had effectively bought the government. Now historians debate the accuracy of this specific dramatic retelling. Some say he did not sell to crash the market, but simply bought quietly. But the mechanics of the story reveal a deeper truth about the world we live in today. It does not matter if the story is perfectly accurate, because the system it describes is the one you are living in right now. You are living in a financial architecture designed by this dynasty and families like them. It is a system based on debt, based on information asymmetry, and based on the ability to finance both sides of a war. This is not a conspiracy theory. This is the history of the bond market. This is the story of how money actually works, and why you feel like you are running on a treadmill that never stops. Welcome to the story of the Rothschild banking system. To understand the cage you are in, we have to go back to the architects who built it. The story does not begin in a palace. It begins in the Jewish ghetto of Frankfurt in the 1760s. Mayer Rothschild was a dealer in rare coins. He lived in a house marked with a red shield, or Rothschild in German. Mayer was brilliant, but he had a problem. In the 18th century, wealth was physical. If you wanted to move $1 million worth of purchasing power from Frankfurt to Paris, you had to load a wagon with gold and hope you did not get robbed by highwaymen or taxed to death by local lords crossing borders. Money was heavy. Money was slow. Money was dangerous to move. Mayer realized that the future of finance was not in moving gold. It was in moving credit. He had 5 sons. He sent them to the 5 financial capitals of Europe. Amschel stayed in Frankfurt. Salomon went to Vienna. Nathan went to London. Kaman went to Naples. James went to Paris. This creates the first multinational corporation in history. They created a network that was faster than any government. If a wealthy merchant wanted to travel from London to Paris, he did not need to carry gold. He could deposit gold with Nathan in London and receive a piece of paper. He would travel to Paris, present the paper to James, and receive the gold there. This sounds simple to us today because we have Visa and SWIFT. In the 1700s, this was a technological revolution. It was the invention of banking as a service. But this was just the beginning. The real power did not come from helping merchants. It came from helping governments. The Rothschilds realized a fundamental truth about nations. Governments are always hungry. They are hungry for territory, and they are hungry for war. War is expensive. In the old days, kings would tax their peasants to pay for armies. But you can only tax a peasant so much before they starve or revolt. The innovation was the government bond market. Instead of taxing people today to pay for a war today, the government could borrow money from the Rothschilds and promise to pay it back over 20 years with interest. This changed everything. It allowed governments to spend money they did not have. It allowed them to fight wars they could not afford. The Rothschilds became the middlemen of history. When the Duke of Wellington needed gold to pay his soldiers to fight Napoleon, he could not get it there. The British government asked Nathan Rothschild for help. Nathan used his network to smuggle gold through France itself, right under Napoleon's nose, to pay the army fighting Napoleon. Think about that for a second. The banking network was so powerful and so independent that it could move enemy gold through enemy territory, because money transcends borders. This is the first pillar of the system you cannot escape. Capital has no flag. Capital has no loyalty. It flows to where the yield is highest and the risk is managed. By the mid-19th century, the family was so powerful that they could determine matters of war and peace. If a king wanted to go to war, he had to ask the Rothschilds for a loan. If they said no, the war did not happen. There is a famous quote attributed to Mayer Rothschild: "Let me issue and control a nation's money, and I care not who writes the laws." Whether he said it or not, the principle holds true. The person who controls the flow of credit controls the destiny of the nation. But how does this affect you today, sitting in your home in the 21st century? The Rothschilds are no longer the wealthiest family in the world publicly. They have been surpassed by the industrial giants and the tech billionaires. However, the system they pioneered is the operating system of the entire globe. The system is called fractional reserve central banking and the bond market. Let us break down the mechanism of the trap. When you think of money, you think of a store of value. You work hard, you earn $10, and you hold that $10. You think that $10 represents your labor. It does not. In the system perfected during this era, money is not an asset. Money is a debt. Every dollar in your pocket is a piece of debt owed by the government to the Federal Reserve or the central bank of your country. Here is how it works. When the government needs money, they do exactly what the kings did with the Rothschilds. They print a piece of paper called a treasury bond. This bond says, "I promise to pay you back with interest." They sell this bond to the central bank. The central bank writes a check to the government. But here is the magic trick. The central bank does not have any money in its account to cover the check. When they write the check, the money is created into existence. It is magic. The government takes this newly created money and spends it. They pay soldiers. They build bridges. They pay welfare. The money enters the economy. It eventually lands in your bank account. But remember that money was created out of debt. The government has to pay interest on that bond. Where does the government get the money to pay the interest? They have to tax you. So a significant portion of your taxes every year goes just to pay the interest on the money that was created out of thin air to fund the government's spending from years ago. This is the Rothschild model scaled up to a planetary level. But it gets worse. Because the money is created as debt, there is always more debt in the system than there is money to pay it. Imagine there is only $100 in the whole world. The bank lends it to you but demands $105 back. You have the $100. Where do you get the other $5? It does not exist. The only way to pay back the loan and the interest is to borrow more money. This creates a cycle that cannot be stopped. The money supply must always grow. The debt must always grow. If the lending stops, the system collapses. This is why we have inflation. Inflation is not an accident. Inflation is not a mistake made by the central bank. Inflation is a feature of the system. The Rothschilds understood that if you are the creditor, inflation is bad for you because the money you get back is worth less. But if you are the smartest player in the room, you know how to hedge against it. You buy real assets. This is the second pillar of the inescapable system. The separation of the economy into two tracks. There is the economy for the people who work for money. And there is the economy for the people who have money work for them. The people who work for money are you and me. We trade our time for currency. We save that currency in a bank. But because the system requires constant expansion of the money supply to pay the interest on the debt, the value of that currency is constantly being eroded. The target inflation rate is usually 2%. That sounds small. But at 2% inflation, the value of your money is cut in half every 35 years. That is a hidden tax. You are being taxed on your labor without a law ever being passed. The Rothschilds and the banking dynasties that followed them understood that you never hold cash. You hold assets. You hold land. You hold gold. You hold art. You hold stocks. When the central bank prints more money to buy government bonds, that new money floods into the system. It does not go to the poor. It goes to the banks first. Then it goes to the corporations. Then it goes to the assets. This is known as the Cantillon effect. Richard Cantillon was an economist who lived before the Rothschilds, but he described the phenomenon perfectly. He said that who gets the new money first matters. The people close to the money printer get the money before prices rise. They can buy houses and stocks while they are cheap. By the time the money trickles down to the wage earner, prices have already gone up. The house you wanted to buy is now 20% more expensive. The groceries are 10% more expensive. You got the money last. You are the victim of the inflation. The people who got the money first are the beneficiaries of the inflation. This is the invisible fence around your financial life. You are running faster and faster trying to earn more currency, but the value of the currency is being diluted to keep the debt system floating. Let us look at a specific example of how this family operated to understand the mindset required to survive this. In the 19th century, the Rothschilds were heavily involved in the railway boom. They did not just lend money to railway companies. They bought the land where the railways would be built. They bought the mines that produced the coal and iron for the trains. They owned the vertical integration of the entire industry. They understood that the real wealth was not in the paper money, but in the control of the resources that the world depended on. Today, look at the major investment firms. BlackRock, Vanguard, State Street. They are the modern inheritors of this strategy. They own a piece of almost every major corporation in the world. They vote on the boards. They influence the direction of the economy. They are utilizing the same principles of passive accumulation and control that Mayer Rothschild taught his sons. Diversify. Control the flow of information. Be close to the source of money creation. So why is this system inescapable? You might say I will just pay off my debts and live off the grid. But you cannot escape the macroeconomic effects. Even if you have zero debt, you use the currency. You are subject to the inflation. You are subject to the boom and bust cycles created by the credit expansion. When the central banks lower interest rates to encourage borrowing, they create a false boom. Businesses expand. People buy houses. The stock market goes up. This feels good. It feels like prosperity. But it is artificial. It is fueled by cheap credit, not by real productivity. Eventually the inflation gets too high, and the central bank has to raise interest rates. This is the bust. The credit dries up. Businesses fail. People lose their jobs. Asset prices crash. During the crash, the people with cash and real assets step in and buy everything for pennies on the dollar. Remember the story of Nathan Rothschild at the stock exchange after Waterloo. Buy when there is blood in the streets. This cycle of boom and bust is the harvest mechanism of the banking system. It transfers wealth from the impatient to the patient, from the indebted to the liquid, from the worker to the owner. The system is designed to concentrate wealth. So what can you do? If you cannot escape the system, you must learn how to operate within it. You must stop thinking like a peasant and start thinking like a banker. The first lesson is to understand the difference between good debt and bad debt. Bad debt is debt you pay yourself. Credit cards, car loans, loans for things that lose value. This is the debt of the victim. Good debt is debt that someone else pays for you. The wealthy use debt to buy assets that produce cash flow. They borrow money to buy an apartment building. The tenants pay the rent. The rent pays the debt. The wealthy person keeps the difference and gets the tax benefits. In this scenario, the inflation works for them. The debt stays fixed, but the rent goes up with inflation. The value of the building goes up with inflation. They are shorting the currency. The second lesson is to understand that saving in fiat currency is a losing strategy over the long term. You need to be in assets. You need to own a piece of the productive capacity of humanity. The Rothschilds did not just sit on piles of gold. They put that capital to work. They funded the Suez Canal. They funded the exploration of diamonds in Africa. They funded the industrialization of Europe. They took risks. The third lesson is information. The Rothschilds maintained their power because they knew things before anyone else. They had the fastest boats and the fastest couriers. Today, information travels at the speed of light. You have access to the same charts and data as the billionaires. But do you have the same knowledge? Most people consume news that is designed to make them emotional. They watch the political theater. They get angry about the culture war. The elites do not care about the culture war. They care about the bond yield curve. They care about the liquidity in the repo market. They care about the real drivers of the machine. If you want to escape the trap, you have to ignore the noise and focus on the signal. Let us return to the history for a moment to see how the family adapted. By the 20th century, the world was changing. The era of private family banking was ending. The era of corporate banking and state central banking was beginning. The Rothschilds saw this coming. They slowly transitioned from being the front-page news to being the quiet power behind the scenes. They helped establish the structures that would become the modern financial system. There is a lot of talk about the Federal Reserve. Is it owned by the Rothschilds? The Federal Reserve is a hybrid system. It is a network of private banks that have a special charter from the government. The shareholders of these private banks are kept private. But it does not matter if the name on the stock certificate is Rothschild or Morgan or Rockefeller. The mechanism is the Rothschild mechanism. It is the privatization of money creation. When the Federal Reserve was created in 1913, it institutionalized the bond market relationship that Nathan Rothschild utilized in 1815. It made the debt of the United States government the bedrock of the global financial system. Today, the U.S. Treasury bond is considered the risk-free asset. It is the standard against which all other investments are measured. But as we discussed, it is not risk-free. It carries the risk of debasement. It carries the risk of inflation. We are currently living through a pivotal moment in this history. The debt levels of the major nations have reached points that would have terrified even the Rothschilds. The United States is $34 trillion in debt. The interest payments on that debt are now higher than the defense budget. The system is straining. In the past, when kings could not pay their debts, they defaulted. They told the bankers to get lost, or they cut off their heads. But today the bankers and the government are fused. They cannot default on themselves. So the only option is to print, to inflate the debt away. This means that in the coming years, the value of the money in your bank account is going to be under attack. The invisible tax will increase. The cage is getting smaller. But there is a crack in the door. For the first time in history, we have access to financial tools and education that were once reserved for the elite. You can buy gold. You can buy Bitcoin. You can buy stocks in global companies. You can start a business that serves a global audience. You can become your own central bank. The Rothschilds succeeded because they were international. They were not tied to the fate of one single country. If France collapsed, they had money in London. If London collapsed, they had money in Vienna. You must adopt this mindset. Do not be purely local. Do not keep all your eggs in one basket. The banking system is a tool. It is a dangerous tool like a chainsaw. If you do not know how to use it, it will cut you. If you know how to use it, you can build an empire. The story of the Rothschilds is often painted as a story of villains. And certainly they were ruthless. They profited from war. They crushed competitors. But they were also realists. They looked at the world not as they wished it to be, but as it actually was. They understood that power flows from those who have the gold to those who need the gold. They understood that trust is the most valuable currency. The reason the 5 arrows of the Rothschild family worked was because the brothers trusted each other implicitly. If you broke a contract with one, you broke it with all. In a world of crumbling institutions, building your own network of trust is vital. So when you look at the towering skyscrapers of the financial districts in New York or London or Hong Kong, do not look at them with just anger. Look at them with understanding. They are monuments to a system of debt leverage and compound interest. You cannot destroy this system. It is too deeply embedded in the fabric of civilization. But you do not have to be a victim of it. You can choose to step off the treadmill of consumer debt. You can choose to educate yourself on the language of money. You can choose to acquire assets instead of liabilities. The Rothschilds built a dynasty that lasted 250 years because they thought in terms of generations, not fiscal quarters. They planted trees under whose shade they would never sit. Most people today are struggling to make it to the end of the month. The system is designed to keep you in that state of struggle. An indebted worker is an obedient worker. To escape, you must break the cycle of instant gratification. You must sacrifice today for freedom tomorrow. This is the secret that the bankers know. Compound interest is the 8th wonder of the world. He who understands it earns it. He who does not pays it. Nathan Rothschild, standing by the pillar in the Royal Exchange, understood it. He knew that one moment of courage and conviction could change the destiny of his family forever. The financial storms are coming. The debt bubbles are wobbling. The question is, when the panic hits, when the prices crash, when the crowd is screaming in fear, will you be the one selling, or will you be the one standing by the pillar waiting for the signal to buy? The choice is yours. The system is inescapable, but your place within it is not fixed. Learn the rules. Master the game. And maybe, just maybe, you can build a shield of your own. Because in the end, economics is not just about numbers. It is about survival. And the history of the Rothschilds teaches us that survival belongs to the prepared.